Just ask Zillow, the real estate company, issuing a cautious outlook for the current quarter, citing headwinds from elevated mortgage rates and weak demand from first-time homebuyers.
Zillow issues a warning to America about the slowdown in the housing market and cites mortgage interest rates and the lack thereof first-time home buyers. But the interesting thing, guys, is they're projecting a massive downswing in the housing market without acknowledging any potential job losses or recession. We're going to listen to a video from the CFO of Zillow, who is Jeremy Hoffman, aggressively talk about what Zillow is up to and what they're warning about the housing market. Now, if you're an agent, a loan officer, or a realtor, you understand that Zillow, at least in my opinion, I don't want to get in trouble, but they're starting a monopoly. They want a monopoly and total control over the housing market. Right now, what's going on, it's crazy. It's a data game. Data is almost godly powers, and Zillow wants all of the data. What's really interesting, guys, is they're also growing in many different niches in the real estate industry, like being loan officers and lenders, and also doing realtor and also being landlords. You guys, Zillow is helping, in my opinion, to manipulate the housing market. And I really hope that America starts to wake up. Now, one of the questions that I want consumers and viewers to be able to answer by the end of this video is, what can first-time homebuyers, potential first-time homebuyers, do to improve their purchasing power? We don't just want to stay stuck on the sideline, twiddling our thumbs, waiting for a recession and housing market crash to come knocking on our door. Often by then, it's too late. So we have to be able to answer right now, how do we increase our purchasing power? Now, in addition to watching the video with the CFO from Zillow, I'm also going to show you what Secretary Yellen has recently said about the housing market and first-time homebuyers. She's the Secretary of the United States of America. So I'm going to get to that, but let's jump into the first part of this video where Zillow, although they're issuing a warning, they're also telling you that they're having exponential growth in certain sectors of the housing market. Again, they want a monopoly. They want a monopoly on the housing market. Let's get started by listening to what they view their strengths are.
Can you tell me, and what color can you give on what you are seeing from those first-time home buyers and where you are maybe seeing strength and weakness during the quarter, not just last quarter, but in the current quarter as well?
Yeah, absolutely. I think it's no surprise that when interest rates spiked the way that they did in the back half of the quarter in March and into April, we started to feel some impact in the housing market, and that was reflected in our guidance. I think at the same time, we look at what we did in Q1, and we outperformed the real estate market by 900 basis points. And that was on the back of strength from all parts of our business. So our residential business grew by 9%, excuse me. Our mortgage business, which is where we provide mortgages to through Zillow Home Loans, that grew 130%. And then our rentals business, which we shined a light on yesterday, grew 31% overall as well. And that was the seventh consecutive time in which we've outperformed the residential real estate market. So we feel really good about what we're in control of, despite the fact that home buying right now is tough.
So what you didn't hear is the 15 seconds prior to that clip where he briefly acknowledges that the industry is slowing down as a result of, number one, mortgage interest rates, and number two, because the lack of new first-time homeowners. They don't want experience. They're not saying experience. They're saying the naive first-time homebuyer. So it's fair to say they're saying the market is not naive enough for us to grow. Would you agree? Let me know. Let's go back into the video where the CFO is now going to acknowledge a little bit more in detail mortgage interest rates and unaffordability.
Okay, but first I do want to ask you about mortgage rates and when you expect some relief on that front and how that's going to flow through to your business.
Yeah, I mean, I heard it from the guests just before, how challenging it is out there to try to expect what the Fed's going to do. Our view is that housing is going to be roughly flat this year, and we don't necessarily take an in-house view on mortgage rates specifically, but we think the housing market is going to be flat as affordability continues to be a challenge. At the same time, we do know that it's a growth industry over time, and we feel like we're well positioned to take advantage of that, when the time comes.
Again, No mention whatsoever about recession, inverted yield curves, massive equity run up, things of that nature, and no mention over the biggest thing of all, prices. The PE ratio is exploding. It's gotten even worse. It's now updated for January. Let me show you. I want to make it a point to say it is so important to cite your sources of data. We need to triangulate data. This is from longtermtrends.net. Okay, this is the home price to median household income. So how many years of median, the entire household, not individual, but median household income into house prices. You guys can see this updated in January to 7.64, exceeding any time in history as far as PE ratio, exceeding even the GFC by, I would say, a substantial amount and in a faster amount of time. Astonishing, astonishing stuff. Price, you guys, is extremely, extremely important. Now, let's hear what Zillow has to say about the rental market. And I'm going to tell you guys again right now why. Another institutional investor purchasing single family residences, driving the prices up. Unbelievable, right? Absolutely unbelievable. But yes, you guys, Zillow is a landlord. Listen up.
It is interesting that you are making that increasing bet on rentals, right? That there is that rental portal on your site alongside the ability to look at homes for purchase. Is this a bet that this will be a prolonged cycle, that more people are not going to be purchasing homes, but rather are going to be looking to rent?
Yeah, I think it's more, what we're trying to do at Zillow is be a housing super app. So that means that we're providing services to anyone that's trying to move in any capacity, whether that's being buying, selling, or renting. And rentals has been a bet of ours for a long period of time. We've invested against it as a result of that. And of course, having all the inventory on the home side and as much inventory as possible on the rental side is a benefit to our consumers because they know what's out there for them, whether it's the right choices to buy or to rent. And obviously in a moment like this, renting does make a lot of sense. And we like the consumer experience we're building, plus the business opportunity we see over time.
Renting does make a lot of sense, especially when it comes to Zillow's desire, as he said, to become a super app, really a monopoly once again in the housing market. But again, we hear total lack of caution. In fact, the only time that I've heard personally Zillow say it's a good time to rent is when they're bragging about the profits that they're making as landlords. Maybe I'm wrong here. Now, this here should remind us that we cannot get lazy when we go into the next pendulum swing, okay, to where prices go down, to where we have price discovery. There's going to be buying opportunity. My concern is, when will the next buying opportunity be after this next one, being how much we've learned about fraud, greed, and corruption in the housing market? In addition to that, let's hear what Zillow has to say about the NAR Commission lawsuit. Now, I want you guys to understand as viewers that loan officers and realtors used to fund Zillow. Zillow made so much money selling leads to loan officers, to realtors. So the fact that they're stabbing us all in the back and consumers in the back should be a wake-up call to you. No one cares about your investment more than you care. Don't trust people. And if you do trust them, verify.
Jeremy, let's talk about the NAR settlement as well. National Association of Realtors, of course, the settlement that could affect how commissions are paid. I think everybody's still trying to get their arms around it. Talk to me about how it could affect your business. Could you see, for example, a drop in your income from the sort of premium listings, if you will?
Yeah, I mean, it's definitely noisy out there right now. Real estate is always a well talked about category, just given the importance it has in the economy and also just in people's lives. So it's definitely been a lot of speculation and big headlines. I think from our view, we think buyer agents, those that help people buy homes, add value. We've seen that over the nearly 20 years in which we've been operating.
I just want to go on record to say it adds value to their bottom line, because those agents pay them money for leads.
operating Zillow, you put yourself in the shoes of a first-time home buyer, and you remember how confusing that process was, and how emotional it is, and how infrequent it is. We think real estate agents provide a ton of value, and will continue to do so regardless of the settlement. And then for Zillow, we orient ourselves around the most productive real estate agents, and the most productive real estate agents have been taking share over time, and we think will continue to take share. So we look at the opportunity and the evolution from here as opportunity really more than threat. And I think we've proven that out in the past, and we'll continue to look to do so.
So only the most productive agents are getting market share. And to explain what that means, only the agents that are paying the money to get the lead share are the productive ones. But regardless, he said it from his own mouth, they see it as an opportunity. Agents, remember that. Stop buying their leads. They want to take your job, and they may successfully do that because realtors have a lot of ground to make up to gain the trust back from America. And half the agents don't even know why the public doesn't even trust them to begin with. It's because the dishonesty, it's because the corruption, it's because of the excessive commission gains that you can make. You can make as an agent more money than a surgeon. Despite all of that, first-time home buyers especially have a lack of knowledge and comprehension in the housing market. And so some of the things that you can do as a consumer to increase your purchasing power is usually just three things: your credit, your income, and your assets. Your credit is fairly easy to manipulate. Just no more bad stuff from happening, and understand it's how you use your credit cards that matter most. You don't want to go over 30% of your credit line ever. In fact, if you're over 30% of your credit line, pay that credit card down. Now, the second thing is income. Remember, you guys, not all of the income that you make can be used as purchasing power. Usually, if you make a W-2 income, it's easy to prove. But if you have a second job like Grubhub, or you have a 1099 job, remember, you need a 2-year history of self-employment, second job, bonus, overtime, or commission. So get started right away. And hopefully, if you've already started working a second job, hopefully you've had that for 2 years and can now use that income as purchasing power. The third thing being savings, assets. Most important thing to do, rebudget. Most people spend way too much money on subscriptions and going out to eat. Doing those two changes, minimizing those expenses alone, should allow you to save a lot more money. One of the major compensating factors when it comes to purchasing houses, especially if you have low credit, is having money left over after you purchase a home. It's called reserves. You want 2 to 3 months of reserves after you close. Reserves means a mortgage payment. So you need to have 2 to 3 months of mortgage payments saved after you close as a general rule of thumb. Now, let me show you, okay? It's regardless of all of that, the economy is horrible because of many things, not just the greed, corruption, and fraud, also the government, the Fed, the way that they're spending. Even Yellen, Treasury Secretary Yellen, got involved and said this. This is from Fortune. This is what she had to say. While house prices haven't gone up, and now with much higher interest and mortgage rates, it's almost impossible for first-time buyers, Yellen said. The article goes on. Yellen also cited the lock-in effect as a major obstacle for new buyers. The phenomenon is when current homeowners are reluctant to sell their home out of fear of losing their low mortgage rates, only to trade it for a higher mortgage rates. A pair of housing tax credits proposed by Joe Biden, however, could potentially help ease the lock-in effect, and it's basically a $10,000 credit potentially if you sell your house. She ended by saying, we know that affordable housing and starter homes are an area where we really need to do a lot to increase availability. And one of the things that I think that they could do to increase that availability is, if they're going to continue to deficit spend money that they don't have, use it on making projects of affordable housing, we know there's deficit spending because we see it right here. There's already $1 trillion in deficit spending year to date. During the peak of the GFC in 2009, the deficit spending was 1.42 million. Stop spending our money and adding to the inflation. I think that would be pretty helpful. I mean, tell me what you guys think. I mean, when the government keeps spending money to fight wars or whatever it is they're doing, Inflation Reduction Act, whatever it is, funding the IRS, anything that they're doing, these money spurts are wrecking us. Because remember, we as taxpayers have to pay that. And even if it's not coming out of our paychecks, it's certainly coming out of our wallets when we leave our house. In fact, when we even stay at home, electricity, everything. And so again, I believe that it's going to take a half a decade to a decade for balance to come back to the housing market. Things are so out of whack right now. It is impossible for things to sustain. We are just swinging. The pendulum is just swinging to the other side, and the powers that be are trying to slow that down. I believe as a result of the presidential election, but the pendulum is swinging, and we are going to go through times to where we get back to balance. But that may take, again, 7 to 10 years. And so in the meantime, we, again, as consumers, if we are forced on the sideline or if we are deciding to be on the sideline, not only do we have to understand hyperlocal data, we have to always try to stay ahead of the inflation by working on our purchasing power, credit, income, and assets. And that is the answer to the question on how do first-time homebuyers, and really any homebuyer at all, improve? How do they improve their purchasing power? Now, if you want a booster shot of skills and knowledge, I have a free home buying course. It's probably about 2.5 hours. It's in the description below. I pay money to have that accessible to you. My thank you to the community for supporting me. Now, other than that, guys, I really hope you guys got some new value, insights, and perspective. And if you're out there investing in real estate, you guys already know I wish you luck, and I hope you win.